The U.S. International Trade Commission meets today to review tariffs imposed on imported solar panels. And according to the U.S. Solar Industries Association, as much as 62,000 jobs and $19 billion in investments could be lost from those tariffs. Joining us now from Washington is Tom Werner, Sunpower CEO. Are you going to play a role in these hearings today?
Yes, I'll be testifying at the hearing today.
And what do you plan to say? What's the goal?
Well, since the first hearing, Sunpower has made a significant investment in solar manufacturing in America. So we're representing the domestic industry, and that's really what's at question today, is how is the domestic industry doing since the tariffs have been put in place? And it's important to note that it's 10 times as big as it was 2 years ago. So the intended effect is actually working.
So how, though, is it working? Because aren't, in essence, the duties that are driving up costs for developers and, say, panel installers like yourself, in essence, in terms of also industry workers? Isn't that the negative?
No, I think actually the facts are that the price of panels has come down over the last 2 years. The industry has actually grown. And importantly, the domestic industry is 10 times the size it was 2 years ago, which is rather incredible in just a 2-year period. And it produces 25% of the panels that are consumed in America, up considerably from 2 years ago. So it's hard to dispute that the tariffs are doing what they were intended to do.
Well, what do you make of then when the subsidies sort of roll off at the end of this year? You might not get as much bang for your buck if you're going to install solar panels. How does that then play on the demand side to all of this when you're factoring in tariffs?
Well, for Sunpower, demand is rather incredible. The distributed generation solar is actually better than it's ever been in America. Residential solar, our demand is the best it's ever been. We're up 30% year on year. Commercial customers are coming to us to make a difference for climate change. So the market is great, and costs have continued to come down. We're actually a preferred energy source driven by economics.
But does that sustain itself in 2020?
Oh, I think even more so. I think what's coming is the cost of storage coming down. And when you combine solar with storage, and solar is already economic, the things that you can do to optimize the use of energy, I think we've just begun. And I think it's going to be ever more growing faster than ever.
So then if you look at 2020 and you still have these kind of macro stories, what's the biggest driver for your business? Where's the upside going to come from, and where's the potential risk going to come from?
The upside is customers want solar, and it's economic. So you can make a difference for climate change, you can control your own energy costs, and it's economic. Secondly, storage costs are coming down, so you can make a more resilient grid and a more resilient utility by having solar produce energy where you consume it. The biggest challenge is uncertain policy. Policy can change the cost of capital. That can change the growth rate, but I think regardless of the scenario, we're going to see exceptional growth going forward.